Hey, everybody, this is George, and welcome back. I'm back. I was sick, and so my voice might come in and out a little bit. But anyway, the exciting part was that, well, I actually kind of missed doing the last week's show. And so super excited to get it done this week, albeit, we were helping out some of our neighbors getting their big old water line in place. And so I was a little bit spent yesterday. So first thing this morning, hey, we're going to get this thing rolling. And the first question that a lot of people are saying is, okay, wait a second. You're saying that historically new construction is about 10% of the market, but yet today it's about 30%. And actually I'm like, well, no, it's actually closer to almost 32%, which is a big deal. Now, some of you might be saying, George, for heaven's sakes, dude, does that mean our market's crashing? Does that mean that everything is about to implode? Is this the forewarning that this thing is going to just crash and burn? And the answer is no. See, the problem is that we are seeing so few homes coming on market that at the end of the day, new construction, which has, again, a structured delivery over a period of a year and a half, depending on when they start a plat, those numbers, those homes keep coming on. But with the folks that have the 3%, 3.5% mortgages, well, guess what? They just don't want to come and sell their house, and therefore they're not coming on market. So our inventory has been dwindling and dwindling. And in fact, so first, let's hit our little subscribe, share, and like. So remember, smash that subscribe button because the algorithm, when you guys select this, helps other people to see it. And the important part about this is that because there's no selling, it just helps people make a really good business decision. So help us out. Make sure you like, subscribe, share this with people that you like. Yeah, share it with a couple of people you don't like so that they can make a really good decision because, well, that's just the right thing to do. Anyway, moving on. So let's take a look at what we've been seeing for this last 7-day running average. So this is one of the biggest, new on market that we have seen in a long time. 1,026 homes coming on. We have 1,418 that went pended. And then, of course, 1,000 homes actually closed. So here's the thing. We are still seeing, even though we're starting to see some better numbers as far as actives coming on market, since the average before Friday actually was around about 780 homes. And so we were still taking off 1,400 homes. So we're still seeing for every home that's coming on market, 2 going off market. Now, that's a big deal because we keep drawing down that inventory. We should be, realistically, we should be at about 18,000 homes right now. And as you can see in our chart here, we're kind of lagging a little bit on this one. And it's really kind of tough because when we take a look at these numbers here, you can see that we have 7,227 homes. That is super low. Again, we should be 22,000 homes. We have about 1.3 months of inventory. We're about 9,000 homes short on new construction coming on, or new inventory coming on market. And then, of course, 7,000 lagging for number of actually sold year to date. All right. And then, of course, there's about 5,000 less pended year to date when we take a look at year over year comparisons. So here's the thing. It's not that our market is recovering. It's not that we're doing amazing, although all things considered, it is doing pretty amazing. The price support and the reason, and you're going to see later in the report, even on a national level, the reason we are still seeing about a 4% appreciation year over year is because there's just not a lot of homes out there to choose from. We still have interest rates that have been coming down over the last 5 weeks. Now, granted, yes, they bobble up and down, but on the whole, they have been coming in a downward trend. Affordability has been in an upward trend, and buyers have been coming out. There's still a massive pent-up of buyer demand out there. It's just with interest rates coming down, limited inventory, this is why we are starting to see a lot of multiple offers. The benefit is no crazy escalations. Sure, we see some escalations, but none that are just like the outlandish craziness that we saw in 2020 and 2021. So when we pop back here, we take a look at the new construction, okay? New construction, you can see it says, hey, we're up 115%, but yet our solds are actually down about 9.5%, or just a couple of hundred homes. And then as you can see, even year over year and the month over month from year over year, you can see that those numbers are very, very solid. And so we are seeing, again, just more new construction come on because it just makes sense for the builders, right? There's not a lot of inventory, and so they're able to actually come in. And in fact, funny enough, the National Home Builders Association, in December, there were about 59% of the builders that were offering incentives on homes. That has actually come down into the high 40s. I think our area is like 48%. And that's a big deal because now we're seeing less and less incentives because there's fewer and fewer homes to choose from. And new construction, absolutely, without a doubt, is hitting it hard. When we take a look at, REOs, real estate owned, bank owned properties, you look at this number, they're like, oh my gosh, George, it's 135% higher than it was last year for total inventory. Okay, you take a tiny number and double it, it looks like a big number. We have peanuts. We've got, I think it's like 52 homes. Is that right? 52, something like that. 52 homes throughout half of Washington state. That's nothing. All right. Why haven't some of those homes gone off market faster? That's super easy. See, we were still one of the 5 sweet spots across the United States. And asset managers are really pushing price in a lot of areas. And so, which is fine. I mean, that's what they do. Overpricing is the kiss of death, whether you're an asset manager, meaning a bank-owned property, or a traditional seller. Look, overpricing is the kiss of death, and we can prove that time and time again. That's a story for another day. All right, when we take a look, let's go ahead and let's move on. When we take a look at mortgage rates, you can see that they've been bobbling up and down and up and down and up and down. They're on a down at the moment, and that is super cool because, again, it just continues that desire for buyers to come in and start to play because they have acclimated to these higher rates, knowing that really towards Q4 of this year, fourth quarter, or even 2024, when we are going to anticipate mortgage rates starting to come down into the 5s and whatnot, we will anticipate a wee bit of a refinance burst as people vie to get those lower rates, for more of a long-term commitment. Now, totally cool, totally expected. When we take this and then we translate this into what we call the affordability chart, you can see on the right-hand side that our affordability, we've actually, with interest rates coming down consistently, that the affordability is going back up. Now, it is nowhere near as where technically where everybody wants the affordability as a little bit higher. Yes, there's, and I don't know if it's going to come to fruition. There's so much pushback on this craziness about Fannie and Freddie charging more for higher qualified people, better credit scores and whatnot versus the others. Understand that there's always been some form of credit for the higher wealth people, not even really higher wealth, better credit, and to offset or to try and help some of the folks that maybe just aren't as financially astute. It's always kind of been there, but just not as glaring as it was just made, by the media. There's a lot of people that say this is probably the dumbest thing that's come out of the White House. I argue that. I think they've got a lot of dumb things, but nonetheless, here we go. We'll see what shakes out of that one. It is a little bit of misinformation that is out there. Don't panic. So there are certain things that are going to happen, certain things that aren't, and they have a funny way of, disappearing when they're bad ideas. Go figure. All right. When we take a look at our next slide here, this is where we start talking about the National Association of Home Builders. This is currently 1/3 of the housing inventory in new construction compared to historical norms of more than 10%, right? So listen, this is the important part when we talk about what is normal versus what are we seeing, and is this is this a strange trend? And the answer is no, it's not really a strange trend. We have been seeing an increase in new construction inventory. If you've been watching the show, you've been watching that as our other inventory has been trickling down. But the incentives that are being offered with new construction right now aren't quite as, well, they're not quite as in a beneficial level as what they used to be. Why? Well, because they don't need to offer as many incentives, because people look at it and say, hey, you know what, I'd rather own new construction, and there's still some benefits here. By the way, I can't find anything out there on the resale world anyway, so let's move that direction. And that is a big reason why we're seeing a lot of builders putting more and more inventory out there, because they're financially smart. They get the idea, and you got to get while the getting's good, since they did take a pretty good beating in the last 12 months. All right. When we take a look at this, we take a look at things on the national level, the FHFA, that's fair housing, right? Report. Basically, we've seen a 4% year over year appreciation. Yeah, that's about right. That's about what we've seen here. New home sales rose for the fourth time in a row, soaring. You just got to love those words, soaring to a one-year high in March. All right, well, that's fine. The however is when you take a look at existing home sales, those have actually dropped back. And why? Well, because there's a lot of sellers that just do not want to trade in their lower interest rate. So what they are doing, however, is that they are going, they are purchasing a different piece of property, whether it's their future forever home, their retirement home, different rental property, whatever it is. They are becoming takers in the market, and that they are not adding to it. They are taking away inventory. And in time, certain things will come back online and whatnot, and we'll see what shakes out of that. If you have any questions, remember, hey, like, share, and subscribe. Make sure that you share this video. This is in real time. People are talking about February and March. Hey, we're talking about April, and about tomorrow, which is May. Happy May Day. And just understand that we have real-time information that is free. Please share and like and subscribe. Smash the subscribe button, only because, well, it's just fun. In the meantime, I'll see you guys on the next video. Have a great Sunday, and I'll talk to you later. Take care.